Hey guys, and welcome to today's video. So in today's video, we're going to be discussing how to manage your expectations in the forex market, especially as a day trader. You want to know how to manage your expectations in the forex market. So I'm going to be going over the trade um, of today. Like as you know, we're on a journey, a 3-month journey. For those of you joining us just in this video, this is actually episode 5 of this series already. So we're already on a journey, and I've given you guys step by step what we are looking at, what we are focused on, the step by step approach, the process, which is more like a trading plan, a strategy we're working with. And hopefully, by the end of this whole series, I'm going to be giving you a template of a trading plan that you can actually go in and cultivate for yourself, especially for those of you that's looking to be able to develop your own personal trading plan. So I'm going to be giving you a view of how my own trading plan as regard this particular process looks like. You know what I'm saying? And how it's helping me being able to catch trade on a day-to-day basis and also be on the right side of the market. So back to what we are about to discuss today. We're talking about managing your expectations as a day trader. So as a day trader, your goal is to be able to catch daily expansions. You know what I'm saying? You want to look forward to catching daily expansions. In other words, you want to know where we are. Am I going to see price retrace to, and in terms of support or resistance, so I can capitalize on that to catch the next move to the buy side or to the sell side in terms of an expansion, or where am I looking for price to run an old high or run an old low, so that I can capitalize on that to actually catch an expansion of that particular day. You know what I mean? So this is one of the two things you're actually looking out for. You know what I'm saying? And also, which is why one of the reasons why I'm actually taking you on this series is that you want to also know how that particular currency pairs you trade actually delivers. You know what I'm saying? You want to know the time limit. You know what I'm saying? You want to know from the time of your entry, the time you click the buy to the time you are clicking the exit, how long does it stay? Like trading gold for a while now, I've noticed that when gold is actually in its zone, it tends to deliver very fast within 30 minutes to 1 hour. You understand? So if I see a trade lingering beyond 30 minutes or 15 minutes, beyond 15 minutes, beyond 30 minutes, or beyond 1 hour, I have a kind of suspicion as regard that trade. And that's what's going to actually frame the context of what I'm about to talk to you today about. Good. So to be better understand what I'm about to share with you, I want you to um, focus on this New York Q zone right here. Mind you, our focus in this series is the New York ICT New York Q zone. You see the way the price action on the 15 minutes is actually very chubby. You can say, though it's actually delivered to the buy side, and I'm going to explain why it's actually delivered to the buy side. Though it delivered to the buy side, but you can see it's very chubby. It's not like very smooth as you can see on this particular day right here. For those of you wondering, I'm talking about this particular day. As you can see in this particular day right here, the price action delivered smoothly to the sell side. Unlike this particular day right here, let me bring the crosses so you follow me through. Unlike this particular day right here, this particular day delivered smoothly as that and compared to this particular day right here. And it's not supposed to be so, saying that we are actually in um, a bullish trend. You know what I'm saying? Saying that we're actually a bullish trend. So you expect price to actually deliver smoothly to the buy side. You know what I'm saying? Why? Because this whole expansion to the buy side actually took out this high on the 1 hour. And you can see my markup right here. I said if break of structure occurs here, then bullish trend is confirmed, high from 1 hour. And this is the particular high right here. So we can see that from the New York midnight open right here, we can see the way price expanded to the buy side, first taking out the high right here, retrace into this breaker block right here, and you can see how price expanded to the buy side, taking out this old daily high over here. Good. So later on we now start seeing price start selling in, you know what I'm saying, into here, and to frame our idea for the buy perspective in the New York Q zone. And when that buy perspective started, you can see that for the moment it started impulsively, but all of a sudden it started being chubby, and the price failed to take out this particular high that took out this old daily high, and which is not supposed to be so in terms of our expectations. Like what I was expecting today, I was expecting price to actually come, tank below this low, or even go to this deeper discount right here, then expand. Seeing that it has take out this, I wanted to see price take out this high for first target, take out this high for second target, probably take out this high for third target. You understand? But that didn't happen. You know what I'm saying? But because of I understand the idea of managing your expectations, you know what I'm saying? I understand this particular pair. I had to start managing my expectations in the forex chart, and I just got out without even waiting price to deliver so long. And you can see that just before the end of our classified Q zone, mind you, this Q zone is the way I classified my own Q zone, which is from 8 o'clock New York time to 1:30 New York time. So that's how I classify this one, my own ICT New York Q zone. Good. So you can see even before we enter the Q zone, you can see this impulsive sell. Let me zoom that in for those of you wondering what is that. You can see how we add this impulsive sell to the sell side. You know what I'm saying? Almost eating up the 50% of this whole expansion to the buy side. You can see this whole sell down close candle. It ate up almost 50%. So imagine you were in a profit and you were trailing your stops. This whole sell would have knocked you out. You know what I'm saying? And that brings me to what I want to share with you. I want to say to especially those of you viewing this channel and following this series. Some of you have good strategies. Some of you have good perspective of the market. Some of you can read price action. But one thing that keeps keeping you um, unprofitable, that makes you stay inconsistent and not profitable, is this particular thing I'm talking about today. You are expecting so much from the market. You are forcing the market to deliver a particular thing. You know what I'm saying? You want to be able to be flexible when it comes to in terms of expectations. You know what I'm saying? All you want to focus on or all you want to hold on to, you know what I'm saying? It's your institutional order flow and your price delivery arrays. You understand? Those are the only things that you can, how will I put it? You can factor in or you can lay hold of. You know what I'm saying? But in terms of how price deliver, how fast will deliver, you understand? You have no control over that one because that will respect time. You understand? That has to do with time elements. You know what I'm saying? And you can't control time. I say that again. In respect to how fast price will deliver, how price will deliver, you have no control over that. You know what I'm saying? All you have control over is your entry point and your exit point. You understand? Like for me, for instance, now I have an expectation of when trading gold. You know what I'm saying? And that expectation is if I'm enter a buy or a sell at my preferred entry level or exit level, entry level in terms of maybe a PDRA on the buy side or the sell side, I'm not expecting to stay, especially in the gold trade, for more than 1 hour because I that is my expectation. That is what I've seen. That is what my trading plan says. I don't get it now. So what do you do when you have expectations like that and the market is not aligning to your expectation? That is when you get out of the trade. No matter if you see someone at the end of when you got out of the trade come out with profit, that doesn't matter. That shouldn't count. That shouldn't move you. Because for those of you joining me in this series, this is something you must take into account. You understand? Or else you're going to just destroy what you have been building over the months. I don't even get it now. This is one of the things you're going to let go in this 3 month journey that we are on. You understand? You want to minimize your expectations. You understand? When I talk about minimize your expectation, I don't mean destroy your trading plan. I mean, what I simply mean is hold on to those expectations you have on the chart, on your trading plan. When you see that uh, price is not following it, stay out of the market. Cut out your trade. Stay out of the market. Don't leave your trade there and start forcing it to pan out. I don't get it now. So, just for completeness sake, I'm going to explain why what happened actually happened. I don't get it now. Good, and that is what I'm about to share now. So you can see when price took out this particular high, this was at this point was when we now knew that our institutional order flow for this new day in towards the New York ICT New York's Q zone is going to be bullish. But if you notice, price came down and expanded for a second leg, and this whole second leg went for what? An old daily high. Now, when you see an high being taken out, the price delivery that's going to set in is going to be a reversal, and that was why we saw this old drive to the sell side. At a point, I was selling around here. I don't get time, but the reason why I got out was because my expectation was bullish. I don't get time because we are taking this out to this high. So I was selling around this region at the point, but I just took out my positions because I didn't want to be stressing my mind to focus on two sides of the market. So but you can see the way price delivered to the sell side all the way into where this particular fair value gap on the 1 hour. Good. So now price now started bouncing up. You understand? Started bouncing up and failed to take out this high. You're going to understand why now on the 1 hour. You can see that when price came down to take attacked this particular fair value gap, it actually broke structure right here. It broke a 1 hour structure. And now this 1 hour structure, why is it very, very significant? Because this impulsive drive on the 1 hour was actually took out two highs, one and an old daily high. So when price came down here, you're gonna get it now. So the price had to expand, I don't get it now, and respect this particular high for a moment. I don't get it now. I'm not saying that price is not going to clear this high later on, but within for in terms of price delivery within this ICT New York Q zone, price had to respect this high, because this high, you want to say, as so, because the low actually rather that pushed for this high has actually been violated by this whole drive to the sell side. I don't get that. In other words, what has happened right here? We now have a dealing range. For those of you that have not seen the dealing range video, you can go and watch that on my YouTube channel. I can leave the link in the description or somewhere around this video. So price pushed to the buy side, took out this high, and price came down to the sell side and took out this low. So from this particular high to this particular low, we now have a dealing range. And whenever you're trading within a dealing range, you have to be very, very careful. I don't know if you get it now, because a daily range can actually trap price. I don't know if you get it now. Can actually trap price. So this is something you're going to write in your notes. I don't know if you get it now. When you say dealing range, you want to say a dealing range can actually trap price movement. So, and that's what happened right here. So though today supposed to be a bullish day, which you can see clearly on the 1 hour, the impulsive candles tells us clearly that there was a bullish momentum in the market in the New York Q zone. But why didn't it take out this high is what I'm showing you right now. Is that from this high to this low is actually a dealing range. And why is it a dealing range? Because this high took out not just this high, but actually this old daily high, and now it came back and attacked this low that shoots out for this high. So we have a run on liquidity to the buy side, a run on liquidity to the sell side. I don't get it now. And you know what happened? Price is going to be trapped within this range for a while until price show a willingness to pick one direction. So you can say currently now we're kind of in an indecisive mode in the marketplace. Why? Because we have what? A dealing range right here. So I don't know if that makes sense to you, and I don't know if you found value in it, but it's something I want you to study, and for you to better understand, you can watch that dealing range video I created. You know what I'm saying? And it's doing actually very well on YouTube, and because a lot of the people are benefiting from it, and even a lot of my mentorship students are actually benefited from that dealing range video. So it's something I want you to go and watch and see for yourself based on the explanation there and what I just showed you here, why this actually happened. So I want you going forward in your trading plan, in your day trading, I want you to actually manage your expectations. I don't know if you get now, because what you may not know what particular price delivery mechanism is actually setting in, especially if you are focused on one particular time frame. Like if I didn't come back to the 1 hour, you wouldn't have known that we had a daily range that actually formed. I don't know if you get it now, and you would have been pushing for price to take out this high, and probably you would have been frustrated because price actually did not take out this high. It's trapping price within this particular range. I don't want to create a lipstick, but you can go to your charts and focus on this high and on this low on the gold. At the time of this recording, this is 11th of April, 9:16 p.m. So you can go and check that out, get it now, and you can see things for yourself. So I hope you found value in today's video. I hope you take out one value or two from this video to better improve your trading. I hope you're actually documenting your trade just like I've told you. I hope you're following the step-by-step process. Mind you, we arrived at this whole thing because we started all the way from the daily time frame right here. And just to even add a bonus for you, you can see that even on daily time frame, let me zoom that in properly. Even on daily time frame, we can see that one of the reasons why price has not even pushed higher is that we have a fair value gap here. We have this low, sorry, we have this high right here. Let me bring the crosshair. We have this high right here, and we have this low right here. So this whole space right here is actually a fair value gap, and you can see that this candle traded into that fair value gap. So that's also another reason why price didn't push higher today as we expect it to do. You get it now. And if you go to the 4 hours, I also have things outlined right here, how price is building up, and on 1 hour too, we also have things outlined also. Good. And all where we execute our trade is actually on the 15 minutes and the 5 minutes for precise entry. So this is what I want you to go forward in your chart. I want you to anticipate these things. Look out for these things in your chart. I don't get now. Pay attention to little price delivery mechanisms like the dealing range, the buy model, the sell model, market maker buy model, sell model, and I've discussed it extensively on all these stuffs here on this channel. You just need to go down to the other videos and go look out for those things and watch them. I don't get it now. But as long as I keep seeing them in price in this development series, I'm going to be pointing them out for you and telling you why what happened actually happened. So I hope you found value in today's video. Hit the like button, share this video with somebody you know will find it useful, and see you in more videos.